Hey everyone, welcome back to my channel. Today, I'm excited to share with you a highly effective and easy to learn trading strategy that can bring you significant profits. With this strategy, you'll be able to achieve consistent success in your trades, without the need for any complicated techniques or tools. Throughout this video, I'll guide you through every step of the strategy, explaining each detail in a clear and concise way. By the end of this video, you'll have a deep understanding of how this strategy works and how to apply it in your own trading activities. So, whether you're a beginner or an experienced trader, make sure to watch this entire video and take notes, as this strategy could truly transform your trading results. Let's get started. Alright, let's get started with setting up this strategy on our trading platform. I'm going to be using TradingView for this example, but you can use any platform that supports the indicators we'll be using. First, we need to select the pound sterling to Japanese yen currency pair. This is the pair we'll be using for our analysis and trades. Now, I prefer to use a 15-minute time frame for this strategy, but you can use any time frame you're comfortable with. In fact, this strategy can be applied to any time frame and still be profitable. Now, let's add the indicators that we'll be using. We'll be using 3 free indicators in total. The first one is called the Pivot Point Supertrend. To add this to your chart on TradingView, simply open the Indicators section, search for Pivot Point Supertrend, and add it to your chart. This indicator is going to give us clear buy and sell signals that we'll use to make our trades. It's simple to understand and very effective when used correctly. In the next part of this video, I'll show you how to use this indicator to make profitable trades. Stay tuned. Alright, now that we have the Pivot Point Supertrend indicator added to our chart, let's talk about how we can use it to make profitable trades. This indicator is incredibly simple to use. There are only 2 conditions you need to consider: the buy signal and the sell signal. When the Supertrend gives a buy signal, that's your cue to execute a buy trade. And when it gives a sell signal, that's your cue to execute a sell trade. It's that easy. By following these 2 simple conditions, you could potentially make astounding profits with this strategy. In fact, this indicator has a high success rate when used correctly. But, of course, there are a few additional details that you'll need to be aware of to maximize your success with this strategy. In the next part of this video, I'll go into more detail about these details and give you some helpful tips to ensure your trades are as profitable as possible. Stay tuned. Okay, so far we've learned how to use the Pivot Point Supertrend indicator to make profitable trades. However, relying solely on this indicator can lead to some problems, especially when the market enters a ranging zone. In these situations, we might receive false signals that could result in losing trades. For example, this signal here and this one here are both false signals. To filter out these false signals, we need to add another indicator to our chart. It's called the SD Central Pivot Range Indicator. To add this to your chart on TradingView, simply open the Indicators section, search for SD CPR, and apply it to your chart. The SD CPR indicator contains support and resistance lines that help us identify areas of market consolidation or range-bound trading. By using this indicator in combination with the Pivot Point Supertrend, we can filter out false signals and increase our chances of making profitable trades. But before we start using the SD CPR indicator, we need to make a few adjustments to its settings. In the Style tab, select the Cross option, and in the Inputs tab, replace 7 with 100. In the next part of this video, I'll show you how to use the SD CPR indicator in combination with the Pivot Point Supertrend to make profitable trades even in ranging markets. Stay tuned. Now that we have added the SD CPR indicator to our chart, we can use it as a support and resistance level. If you take a closer look at the CPR, you will notice that the lines are very close to each other. This indicates that although the support it provides might be weak, there is a strong chance that the market will start trending heavily to the upside. However, since there is still a chance that the price might break through the zone, we should wait for the price action to confirm the rejection of the CPR before entering into a long position. Once we see the price rejecting the CPR, we can check the Supertrend indicator for a buy signal. If the Supertrend also gives a buy signal, we can enter into a long position. But before we execute the buy trade, we need to determine our stop loss and profit target. In the next part of this video, I'll show you how to set these levels using a simple but effective technique. So stay tuned. Now, let's take a look at a sell trade using the CPR indicator. When the CPR lines are narrow, it suggests that the market is likely to start trending heavily in the downward direction. However, since there is still a possibility of a price rebound, we need to wait for the price to reject the resistance level before entering into a short position. As you can see in this chart, the price has rejected the resistance level, which confirms that we should enter a short position. This can be further confirmed by the sell signal generated by the Supertrend indicator. If you have good knowledge of the market, you can make good profits using just these two indicators. But if you're new to trading or want to make things even easier, I'll introduce a third indicator that can help you execute trades more easily. Stay tuned for the next part of this video. Now, we'll use all the three indicators together to execute a trade. First, add the MACD plus SMA 200 indicator to your chart from the Indicator tab. Now, let's see how to execute a buy trade. The first condition is that the market price should be above the 200 moving average line, shown in green. Next, we'll check the Supertrend indicator for a buy signal confirmation. Once we get the confirmation, we'll look at the CPR indicator. Here, we have a perfect buy signal, so we can enter into a long position. Remember that the price should be above both moving averages before executing the trade. We'll place the stop loss at the bottom CPR line or the swing low. If the distance is too far, we can target the previous swing high, aiming for a risk to reward ratio of at least 1.5. To execute a sell trade, we will first look at the 200-day moving average, which is represented by the red line on the chart. The market price should be below this line. Next, we will look at the Supertrend indicator, which should generate a sell signal. Once we have received this confirmation, we will look at the CPR indicator to further confirm our trade. In the case of a sell trade, the CPR indicator's support and resistance lines will be very close together, suggesting that the market may start heavily trending in the downward direction. However, we will wait for the price action to reject the resistance level before entering into a short position. Once we have confirmed the rejection of the resistance level, we can enter a short position. For the stop loss, we will place it above the CPR indicator's resistance level or at the swing high, whichever is closer. And for the take profit, we will aim for a previous swing low, targeting a risk to reward ratio of at least 1.5. Overall, by using all three indicators, the Supertrend indicator, the CPR indicator, and the 200-day moving average, we can execute profitable buy and sell trades with a higher degree of confidence. Now, when you use this indicator on the 15-minute time frame, it's important to note that your stop loss may be small. However, it's possible for your stop loss to get hit due to high spreads. To avoid this, it's recommended to use a zero spread broker. This is crucial because when scalping, every pip counts, and a broker with a high spread could make it difficult to turn a profit. If you're interested in using a zero spread broker, I recommend joining IC Markets. You can find the link to their website in the description. Now that we've learned this strategy, let's put it to the test on the pound sterling to US dollar chart. I'm excited to share with you the results of our backtesting on a 5-minute scalping strategy. The strategy has a win rate of 91%, which is an excellent result for a scalping strategy. But what's even more impressive is the profit made after taking 100 trades. With this strategy, we increased the account size by over 6,000%. That means, if you started with $1,000, you could turn it into $66,000. One of the best things about this strategy is the risk to reward ratio, which is favorable most of the time. In fact, the largest profit made on a single trade was 40%, and the maximum drawdown for the strategy is only 6%. These results show that the strategy is highly effective and profitable. If you're interested in trying this strategy, we highly recommend that you backtest it with a demo account first before live trading. This will allow you to get familiar with the strategy and make any necessary adjustments to suit your trading style. Overall, we believe that this scalping strategy is a powerful tool that can help you achieve your trading goals. So go ahead and give it a try, and let us know about your success stories. Thank you for watching.